Matt, I'll start with you. I said we haven't had this conversation in a long time. We've been talking about stocks, and I think it's good timing because they're saying that we're about to enter into a recession. 25% chance, Goldman Sachs, I think, said that there's a chance of a recession. So stock market has crashed relatively. But real estate is still, holding on, right? But that it's a domino effect usually. So are we going to see a real estate correction happen in the residential real estate market over the next 12 months, in your opinion?
No. No, and I think I've said this probably 100 times over the past 2 years. I do not see a crash happening. We have already been in the midst of a correction over the past 18 months since interest rates have gone up. Home prices are not appreciating at 20 to 30% as they were during the pandemic years, but appreciation is still appreciation. And if you look at the year over year numbers, home equity and homes have appreciated. Right now you have about $11.5 trillion in tappable home equity right now in America. And that's a new high right now. There's 32 million mortgage holders who can access at least $100K in equity right now. So the market the housing market has been doing a little bit more than just holding on. I think it's still going strong. Year over year is up over 5% nationwide. And if you look at historically over the past 65 years, homes have appreciated on average about 3.5% to 4%. So even if you look at year over year, well, home appreciation is still doing better than what is averaged over the last, 65 years. So real estate is one of those things. It goes with the market, as ebbs and flows to it. But as long as you buy right, you're going to put yourself in a good position to win.
All right. So the win has to be built in. Mo, I'm going to come to you because, Matt, that's a pretty interesting statistic that 32 million people can actually apply for a mortgage of that amount. But Mo, as you're originating mortgages, how big or what's the delineation between saying, all right, we're going to wait for mortgage rates to come down or we're going to act now, right? At 7.5% for a 30-year fix, I mean, yes, perspective is key. That's high for this generation. For other generations, it's not. But as we see the market is pulling back, interest rate cuts are sounding like they're going to be coming. How do you prepare people to say, yes, we're going to pull the trigger here and maybe refinance later, or we grab here because it could go higher? We don't really understand. We don't really know where the market's going.
My philosophy on this is more or less stay ready so you don't have to get ready. It's always those, when you're an investor, if it already happened, it's too late. I think Ian said that, right? You have to prepare and see this coming. So right now, applications, as far as I'm seeing personally, they're already increasing because people are hearing the word on the street that because of the market performing negatively, it is causing interest rates to go down. So those people that have been sitting on the sidelines are now effectively jumping in. But because of that, this is what we had going on in the pandemic. When people jump in because the rates are low, we do have supply issues. So how many people are actually going to be able to take advantage of this little blip in the rates, whether it be permanent or not? Because everybody needs some type of housing over their head. But I feel like the past couple of years, while rates have been high, it's been used as more of a reason to not get into the market. So application volumes are up. I think that, week over week, application volumes are reported through Wednesday. So next Thursday, we'll hear about the last 7 days. I think we're going to see those applications going up and people realizing, ooh, I might have already missed the boat because they're down a little bit and pulling the trigger on those homes they otherwise wouldn't have prior to the last couple of days.
Yeah, let me add to that real quick, Mo. Right now, the mortgage market rate for a conventional mortgage ended today at 6.375%. That's if you buy a primary residence, single family home, 760, 780 plus credit scores, right? But once we start seeing these Fed rate cuts, which we all believe is going to start happening in September, even though the Fed's lowering the Fed funds doesn't directly impact mortgage rates, I firmly believe we're going to start seeing more traction of interest rates going down as well. So once we start seeing rates in that 5 range, there's going to be a whole slew of buyers that's going to hit the market, even with the looming recession coming. you're still going to have a slew of buyers that's on the sidelines right now that can afford to buy, but they've just been waiting for a moment like this. So for those of you who have been trying to kind of like time the market and play like double dutch, you got 1 foot in, 1 foot out type shit, like it's about to be over for you. Because I personally believe home prices are going to skyrocket at that point once all these buyers are in the market. Me personally.
Supply and demand. You're absolutely right. I agree with you.
The demand is still there, right?
Yeah.
It's still there, even with rates 7-8%. Now, once we start seeing 5.5%, low 5s on a 30-year mortgage, forget about it.
Priced out. Yeah.
People going to get priced out. Like, look at the tappable equity, right? Look how many people have equity right now. So you're going to see more inventory. Right now, inventory is at 4.1 months, right? That's still technically a seller's market. Anything above 6 months of inventory is a buyer's market, right? So you're going to see some inventory of people who got all this equity. Now they have an opportunity now to trade up or downsize because the rates are more favorable. It's not 8%. It's, you know what I'm saying? It's 5%. So they're going to put that on the market, but it's still going to be over for a lot of people. They're going to get priced out and there's nothing you can do about it.